Hello, I would like to welcome you all to our Asia Pacific FinTech webinar with a focus on funding options and opportunities during a crisis. My name is Michael Zwiefler, and I'm taking care of Accenture's banking business in Hong Kong. And I'm also leading our APAC FinTech program. So my background is digital banking strategy and transformation, and therefore the FinTech community and ecosystem is very close to my heart. Before I introduce you to our high caliber panel today, I would like to take a minute to reflect on the overall situation that we're all facing. I believe most of you will agree that with all major economies heading into or being in a recession based on the impact on COVID-19, we're all facing a situation that nobody has experienced before. And despite governments and central banks across the world taking extraordinary actions to help individuals and businesses, the impact is massive, and there's practically no industry that is immune against the economic downturn. But as so often, challenges and difficult situations also bring opportunity. So over the last month, we as Accenture have helped numerous businesses, especially in the financial services industry, to accelerate crisis actions that often meant going digital and simplify processes that were previously not a priority. Just one example, we've worked with many banks to enable them to multiply the ability to process loan applications, as they have suddenly seen volumes that were simply unthinkable a few months ago. Essentially, helping them to set up digital lending on steroids, often within a week or 2 weeks. And this is why I believe this situation, despite very difficult for fintechs and startup firms in general, also represents an opportunity. I know fintech means a lot of different things to many people, but at the bottom line, I always considered fintech solutions to drive innovation, customer experience, and simplification. And with these three areas, we usually also see cost reduction. So financial services organizations, banks, insurance companies, they have to increase their investment into innovation and customer experience, and at the same time, accelerate cost reduction programs to stay competitive. That's a clear opportunity for the fintech community. But that opportunity means very little when you run out of working capital because your funding dries up, or you cannot find investors at all that want to invest in your vision and your firm. And hence, this is our focus today. What are the funding options and opportunities that fintech firms have now? With that, let me start introducing our panel. I would like to start with Helene, who is the General Manager of the FinTech Association of Hong Kong. Helene, would you please briefly introduce yourself?
Yes, thank you, Michael. Delighted to be on this panel with everyone, some good friends and other new friends. I think it's very exciting time and very challenging time to be talking about this topic because there are such a diverse spectrum of different fintech startups as well as institutions that are facing a variety of challenges. So, the FinTech Association of Hong Kong is right at the heart of it. We've a very strong community of over 300 members, corporate entities, and over 1,700 individual members across a whole spectrum of large firms as well as startups and a lot of strategic partners in both the public and private sector. So very happy to share some of their experience here today. Thank you.
Thank you, Helene. Next, we have King Leung, Head of FinTech Invest Hong Kong. King, please a short introduction.
Hello, everyone. This is King Leung, Head of FinTech Invest Hong Kong. Basically, our team's mission is to help connect all the major stakeholders in the FinTech ecosystem, not only locally in Hong Kong, but also overseas. Whereas in the Hong Kong ecosystem, we work very hard to be connected with the investors, with the major corporations, with the FinTech companies. So essentially, we are the super connector that essentially you didn't have any need, come to us and we'll connect you to the right party.
Thank you, King. Our third panel member is Mark Munoz, Managing Partner of Vectr FinTech Partners. Mark, please.
Hi, guys. Thanks for having me. I've been in FinTech since the .com days and have been an entrepreneur myself, so I know what it's like to be on the startup side of the world. I'm a co-founder and managing partner at Vectr FinTech. We're an early stage VC, and we have about 80 companies in our portfolio. We have a dedicated FinTech fund that focuses on seed and Series A companies, and we have some amazing companies that we've made investments in over the last 2 years, like Genie and EMQ here in Hong Kong, GigaCover in Singapore, and Paradigm in New York.
Very impressive. Thank you, Mark. And last but not least, my colleague Kate Tan from Singapore, who leads our applied innovation and venture activities in Asia. Kate, could you please briefly introduce yourself?
Thank you. Hi, everyone. I'm Kate. Thank you for joining all of us on this webinar. I spent close to a decade driving transformation and innovation culture for DBS Bank in Singapore. Here in Accenture today, I continue to do so for the firm and our clients. As the ventures lead for Southeast Asia, my team acts as a bridge to the innovation ecosystem by bringing Accenture's clients together with best-in-class enterprise-relevant startups to unlock their growth potential and accelerate digital transformation. From time to time, we also make targeted equity investments in emerging technology startups globally, matching their capabilities with business needs and priorities of our clients. We are currently most active in the AI space, so I'm looking forward to learning from everyone today. Thank you.
Thank you. Thank you, Kate. So I know everyone is excited and we would like to start the discussion, but first I have to do some form of webinar housekeeping. So number one, I would like to point out that you can resize your user interface. You can also ask questions by typing it in. Please don't wait until the end, just start during the discussions and we will address your questions at the end. And the second point, I really need to address Accenture's competition law statement, which is Accenture is committed to full compliance with all applicable antitrust and competition laws. Accenture has designed this program to ensure its conformity with antitrust standards. It's important for you to realize, however, that the competitive significance or specific conduct or communication probably may be most evident to you who are directly involved in the industry. So hence, if you have any concern that the subject of discussion or an activity may not be appropriate, please speak up immediately and we will cease that discussion or activity. And finally, we at Accenture, we look forward to working with each of you at this and future meetings to ensure full compliance with all applicable antitrust and competition laws. So now that I've made all the Accenture lawyers happy, I think we should get started. And I would like to start with my first question to Helene. Helene, you're at the center of all of this, right? What are you hearing from talking to our fintech companies during this pandemic and recession that we are facing in Hong Kong? How are they coping with this incredibly difficult situation?
Yes, thank you, Michael. It's really been very challenging, not only for our members, but even for the association, because at the heart of our vision and mission is to help build out the ecosystem. And the ecosystem is far from being homogeneous, the challenges that they face right now. So we are hearing very divergent responses from our members. On the one hand, you have companies that really excel in some of the digital offering, whether it be an online brokerage or other wealth tech, offerings. So those companies, actually, funny enough, have done quite well, in the current environment, and COVID have been like a tailwind helping them. On the other hand, you have a lot of startups, that maybe are still struggling very much to get the revenue stream up and running. And with the current market, with the current challenges, they really are stuck in terms of cash flow and needed some government funding or immediate relief, because obviously tapping into VC funding, it's also a bit challenging in the current environment as well. And things just, it's a bit slower to react to things. So we are seeing two divergent spectrum. And as an association for the community, what we have done are twofold. We've sort of reached out, we collected the input from our members, we reach out to the government organizations like the Financial Services and Treasury Bureau, the FSTB, our close working partners at InvestHK, and voice out some of what are the most pertinent needs and what are some of the lowest hanging fruits in current existing government funding programs that might be able to relax a little bit so that we're not trying to do the most difficult thing, but out of the lowest hanging fruits, what are some of the immediate relief measures that might benefit, particularly the startups that are really struggling. So we've done that. On the other hand, we also help to promote some of the good news that come from this, because we do want to create a sense that it's not all gloom and doom. It's a very diverse landscape. Everybody is in the current challenge. No one is immune from that. But if you can actually strengthen your digital offering, there's a lot to be said, a lot more business to be had. I quote one example, SoFi, everyone knows that big unicorn from the Silicon Valley online brokerage. They have expanded to Hong Kong and Asia by acquiring 8 securities. A local online brokerage firm. And so we now have SoFi Hong Kong right in the heart of COVID-19 breakout. when this acquisition was announced, and that actually helps them to grow farther, accelerate the growth, and move much faster in Southeast Asia as well as a Greater China area. So it's not all gloom and doom. There are cases like that, but definitely COVID has been a key driver in terms of driving digital transformation, and also in terms of the public-private sector collaboration. Because suddenly, I think, and severely, everyone know that we are in it together. No one is, in it on their own. Yeah.
Now, there's no doubt that financial services is really key for Hong Kong, right? And also with all the other environmental factors, Sino-US relations and so on. I think there's no doubt that fintech should be, very high on the government's agenda. So you're engaging with the government. Do you see fintech at the right level and the right funding schemes to really help the fintech companies that are being affected and not so fortunate that they could really take advantage of the current situation?
Absolutely. I think the government, at all the, relevant institutions that we have been working with and speaking to, really value, fintech as an industry that brings a lot of, value propositions, if you like, to the city of Hong Kong, to the location, and also as a whole in the whole Greater Bay Area and even Greater China area. So I think that the value that they see in fintech as an industry, I never had any doubts about that. And the recent, discussions with them just helped to further strengthen it. In terms of all the different measures, I think there are quite a few measures in place. I'm sure other panelists on the session will be able to go, more in depth on that. So I think it's definitely a move in the right direction, Michael.
Yeah, and you just brought up, right, a key player in this is really FinTech Invest Hong Kong, right? So at least with King, you're the head of FinTech from Invest Hong Kong. So what do you see as the main funding options that our FinTech partners and community should know of? So any opportunities that the FinTech startups could take now from your perspective?
Sure, Michael. Now, before I get into the details, I'll just say that, first of all, navigating through the various government departments has never been easy, based on feedback we got from Helene's team and other stakeholders in the ecosystem. So that's why, so before we talk about the specific scheme and the amount and so on, the one thing I would like to emphasize is that based on the feedback we got, we've been working tirelessly in the past few months, trying to, number one, gather the information to make it more accessible to folks in the ecosystem. And a lot of times, there are already schemes available even before the pandemic, but then just somehow the ecosystem is not fully aware of their assistance. Secondly, even if they are in assistance, it's just that most folks will feel, wow, it's going to be very complicated. I don't know how to navigate and who I should talk to answer a specific question. So it was a bit of opaqueness in the past that we're trying to also find out the appropriate party to address this kind of very practical questions. And we found them, by the way. So I think the third thing is there's just so many. After we aggregated all the funding schemes from governments, we literally have basically, if we printed it out, we have 4 A3 size paper just for the schemes relevant for the fintech folks. So again, it's just a lot of stuff, a lot of information. So answering your question, Michael, first of all, the government has put forward a lot of money, to be exact, more than $40 billion of subsidies of various kinds. Some is for supporting the jobs in terms of job retention. Others would be for rental waivers at places like Cyberport Science Park. Others would be spent in areas like spending on the R&D funding, hiring, business development, overseas expansion. Is the whole range of purposes within this $40+ billion. Of course, this big number is not entirely for fintech, but then the fintech companies are essentially eligible to apply for them. Now, I think the one thing I'd like to, in the interest of time, I just want to quickly highlight 2 schemes that might be of interest to folks in the field right now. Now, the first and foremost is a scheme that is a relatively low friction, if you will. It's a scheme called TVP, So it stands for Technology Voucher Program. So what it is a scheme with a max cap of 600,000 Hong Kong dollars. So it works out to be somewhere around 70,000 US dollar. So what that is that for any fintech, as a matter of fact, for any startups, oftentimes the quickest path to get the next round of funding is to prove that the solutions worked. So it's a whole market validation. So that therefore we see that it's an enormous, I think, space for government to fill, which is to in a way have some sort of subsidy for the corporate clients to in a way subsidize the adoption of a POC, for instance. So essentially, this scheme that I just mentioned, you can think of, let's just say, the POC is going to cost the corporate banking clients 800,000 Hong Kong dollars, in which the scheme will cover 3 quarters. So this is the cap at 600,000. So in essence, the corporate client only has to pay for 200,000 of the whole 800,000 cap. The rest will be covered by the government through a reimbursement process. So this we believe is a very good scheme for the various fintech solution providers, particularly in B2B space, to use this as a way to sort of minimize the sort of barrier for the major banking clients or other FS clients to adopt a new fintech solution. So this is one. Now, another one I want to quickly highlight is a scheme with acronym of ESS, Enterprise Support Scheme. So this is a matching fund for R&D or developments. Essentially, what it is a one-to-one dollar matching fund. So let's just say that the company has this like brilliant idea, fintech, either from overseas or local homegrown fintech, but somehow they have to have some resources or tech resources to take the solution to the next level. Now, actually, the government has this scheme of that cap at 10 million Hong Kong dollars. So in essence, let's just say that this fintech startup has this solution. They would like to take it to the next level with a fair amount of development work. So the project will cost them, let's just say, 20 million Hong Kong dollars for the next 2 years. And actually, the government will subsidize half of it. And at the end of it, actually, the government would not take away any equity. It's not a loan, nor will the government take away any IP. So IP rights will still stay with the fintech. So this is another good way to have some sort of, I would say, financial firepower to help take the fintech to the next level. So I think in the past, we did hear of some feedback that the application process is a bit opaque. It takes a little longer. So again, after hearing this feedback, we literally just went around the government to find help. And we discovered there's actually a team, which is not known to a lot of people before. It's a team called SME1 under the HKPC, Hong Kong Productivity Council. So this team in SME1, they're dedicated to answer various questions, to literally do a bit of handholding to help the companies to go through this funding application process.
Very good, so thank you. So my key takeaway is really this: there's money there, there's funding there, right? There's even with some very reasonable requirements, right? Even if in some of that funding requires certain processes that might be opaque to some people, there's a team that is ready to help, which is Invest Hong Kong. So if I, as an entrepreneur, the best way is to really approach you and your team to get help in that, correct?
Yep. Well, I literally took the last year try to map out all the resources we can get within Hong Kong governments. So we know most of the very helpful people. So come talk to us, we'll connect you with the right person.
Excellent, thank you. So Mark, venture capital, one of the most exciting places to be over the last couple of years, right? So is there anything changing from your perspective through the economic conditions? I mean, if you think about it, right? So most of those entrepreneurs, they've never seen a recession before, right?
Yeah, most of them haven't. And actually, we've spent the last couple of months working with a lot of our portfolio companies. And I think it was said earlier that we have seen a slowdown in sort of venture funding, but it's not like a box of chocolates where things are melting. In fact, there are investments being made. There is capital on hand. 2 weeks ago, we announced an investment into CERN, which was an amazing fintech AI company out of New York. And I think in about 2 more weeks, we'll make another announcement of an investment, more local one. And so there is money being deployed, but over the last couple months, I think a lot of us have spent time working with our portfolio companies, making sure that they were set up in the right way to survive for the next 12, 15, 24 months. And so to your comment earlier, which was quite funny, a lot of entrepreneurs aren't familiar with what it looks like to be in a downturn, and VCs do have a little bit of luxury, I would say, maybe some, maybe not, but our capital is patient, and we've been through recessions before. In the .com crash, for example, there was literally 6 to 8 months of just pure denial from everybody in the market. I think VCs thought that the public markets weren't going to be as bad and impact the private markets, but they did. In 2009, 2010, we saw the same thing, but it was a quick drop, and we saw valuations drop very quickly. But we saw a host of new startups launch during that time period. So we're fortunate in some ways, but our job is still to go out and find the latest, greatest companies, and we are still making investments, and we are still looking to fulfill our portfolio with great founders.
So I understand you really invest in early stage seed, pre-A, Series A rounds. So when you look at that current environment, is there anything specific that you're looking for before making an investment? Has that view changed slightly?
That is a little bit of that. Yeah, that's our secret sauce. What do we look for? So the most often question, and it's a tough one to answer. But from a boilerplate perspective, we still emphasize at the seed and A stage founders and co-founders who are solving really difficult problems with unique technology. And so our time mostly is spent working with the management team, getting to know the management team, getting to understand their vision and where they want to take the company, and ultimately how we can be supportive, not just write checks. Where can we lend some help, either from an operations point of view, from an introduction point of view, and really try to be sort of that partner with them and not just an investor. But frankly, our strategy hasn't changed. We still look for companies that are mostly B2B that can show real ROI back to their clients. If you're on the B2C side, then what kind of distribution channels do you have? What kind of interesting ways that you're bringing on clients, and what problems are you solving for them? And then also, we still feel like there's a lot of opportunity, particularly in Asia, for deep tech companies, basically AI, blockchain, sort of unique tech where it meets fintech. There's still a number of those companies out there that we're working with now, and I still think that there's folks that have amazing founders, and we'll continue to make investments.
And it's good to have venture capital companies that have the experience, right, from previous downturns that help the entrepreneurs really guide through those challenging environment. Thank you, Mark. So, but we are talking about Asia Pacific FinTech, right? So Hong Kong obviously is a key focus area, but we also want to look beyond Hong Kong. So, and Singapore, obviously another key player in this space. So maybe over to you, Kate. So what do you see in Singapore or general Southeast Asia? What kind of funding options do you have there that might be a little bit unique or different to what we see in Hong Kong?
If I could get my slide up, that will help. Thank you. So I'm quite a new kid on this block, but based on our research, Singapore as a whole, knowing that the global outlook looks a bit challenging due to COVID, but we expect that capital raising for venture funds to weaken for the remainder of the year and beyond, particularly for early stage funds. But the Singapore funding landscape remains healthy and active as of now. There is no immediate shortage of funding from VCs. Overall, based on reports we've seen, Southeast Asia-based VC firms have about 4.2 billion in capital, while out-of-region VCs, particularly in the US, have at least US dollars 1.6 billion designated for Southeast Asia-focused startups. That brings the total to about 5.8 billion. Funds are subjected, right, to fixed investment cycles, and so VCs will continue to deploy capital. But based on some of the conversations that we've had most recently in Southeast Asia, VCs will definitely be a bit more careful with a lower risk appetite. And I'm sure, you kind of got the sense from what some of the other panelists were also sharing, right? But to echo what Mark mentioned earlier, in Singapore, we've also had, VCs still continue to announce new funds, totaling about, for example, from BNext, Singapore-based VCs, who just announced 2 new funds totaling $160 million to be invested, across Southeast Asia, India, and Japan to accelerate digitalization in the new normal, of which about 110 million is meant to be set aside to fund early stage tech startups in Southeast Asia and India in the areas of fintech, e-commerce, health tech, and AI, right? We've also, in June, seen that Genesis Alternative Ventures, a private venture debt fund in Singapore, secured an undisclosed amount of investment from a American global investment fund. And we are fortunate, right? In Singapore, the government has intervened very quickly, and I'm just going to mention 2 of the most significant, being the EDBI and ESG Seeds Capital special situation fund for startups that has been announced, and of course the Monetary Authority of Singapore, who has released a support package for financial institutions and fintech firms to help strengthen long-term capabilities from challenges faced by companies due to COVID-19. So the situation, though challenging, again, I think there's still a lot of positivity of VCs continuing to invest in these startups, right? FinTech is growing still as an industry. We still, hear about Series C, being invested in some of these really good growth startups. And there's a lot of growing interest in areas of payments, insurtech, fintech lending services. I had a chat, just last week with some of our VC partners, and the focus seems to have shifted from hyper growth to resilience and profitability. Investors are looking for COVID-proof industries and companies. There is a surge in demand for digital payment platforms, e-commerce, and so forth, right? So if you're just starting out your business, there's no better time to pivot than right now. And, as an alternative source of funding, do consider venture debt as a complementary source of funding only if you want to extend your runway without excessive equity dilution. Venture debt actually trains the startup to be financially disciplined, and it is, after all, a short-term financing instrument and is best considered for a more mature startup with active cash flow going through a growth phase. So this is kind of my sharing just for this portion, Michael. I hope that helps.
Thank you, Kate. So it sounds like there's a variety of broad range of options here, right? So what's your advice on a fintech startup now and applying for funding support at this stage? It's almost like how to best get started, right? How to really maneuver through all of those different options.
I think first do your research and speak to as many experienced VC friends that you have or fellow serial entrepreneurs and get really good advice. I think raising funds, right, will take a longer time. So, start fundraising efforts earlier and leave more capital as a buffer. I mean, that would be my advice, but I think Mark would be even better to give this advice.
Very good.
That was right.
That which leads me to Mark, because of a question, right? We heard a lot about funding, and we saw the case like in Europe, a major airline there where government stepped in and funded, right, the survival, but investors are not happy with the conditions that come along with that, right? So if you hear about government grants, government supported loans, does that somehow, affect your investment decisions? Do you have any concerns about that?
No, not particularly. We're actually supportive of our portfolio companies taking on government money. Usually they're at pretty decent terms, and in most cases, ideally, they're not dilutive. And so yeah, it's actually worked out. We've had several companies, one in the U.S. and one here, and one in Singapore actually receive funding, and it's turned out great.
So let's pick up on what Kate really said. I just replay her question. Right? So what kind of advice would you give startup founders or CEOs to help them through this period? The 1 or 2 things that you say you should really do that. We already heard, start early because it will take some time. But beyond that, what's important?
Yeah, I mean, I think Kate was right. Actually, start early. But by starting early, that means to me, go to the people that you know. If you need cash right away, finding new VCs and introducing yourself to new VCs is going to be a lost cause, to be frank. It's going to take months before you're able to do that. So if you can start with the folks that you know, and at the same time, reach out to a number of VCs sort of on the side, just to build a relationship, get to understand what they're looking for, how they're looking for things, what, sort of what interests them. But if you need immediate cash, then go to those that you know. Second, venture debt is actually an option. We don't necessarily encourage it, but we do think that it's viable. As Kate was saying, it makes sense for those more mature companies. They should be able to access that. And there are some great groups around Asia that can provide venture debt servicing, even some large banks that we know of. And then third, I would say that, ideally, you should be able to turn to your existing investors and see if they can provide some sort of additional loans or convertible note for you at some favorable terms. But I also think a lot of entrepreneurs right now need to think about where they're at in their business, and sort of it was mentioned earlier. Are you a COVID resilient business? Are you a resilient business versus a high growth business? And so there's two things from that comment, which is, absolutely, you want to make sure that you're set up for success. You want to continue to try to grow your business and not necessarily be defensive, but think about the offensive plays that you need to make in order to not just survive, but to thrive. And with that, understand that your valuations, your thinking about how you're going to have to position your company for additional cash need to maybe be revisited. So we're having those tough discussions with a number of companies who we saw in maybe Q4, Q1 of this year have now come back to market with terms that are actually much more reasonable and make more sense for us.
Excellent. Thank you, Mark. King, really, from your Hong Kong Invest background, what would be the kind of key advice that you have for fintech startups right now? The 2 or 3 things that you think are really, really important for them to look after.
Well, for us, since I'm representing the governments, since I also spent more than 20 years in private sector, and I started and ran several companies myself, so I can say that I have been on both sides of the fence, if you will. Now, naturally, in the current economic environment, cash burn is something that's on the mind of every entrepreneur. And to be honest, actually, the government has been, quite generous in terms of allocating a big chunk of resources. I mean, just the I&T fund alone, the Innovation and Technology Fund, there's $3 billion US dollar right there. The money is there to support the ecosystem. Of course, I think in the past there might be some hiccups in terms of the slower process and so on. But now that we have really sort of made this issue more widely known among the upper echelon of the governments. And I mean, at least for the folks that I work with, these guys in various departments in governments, they are fully aware of the acute situation. They are willing to help to make things easier. So for folks like Helene, who has been very closely involved in the process, the feedback that we got from the private sector have been fed back to the various departments. And there have been some, I would say, incremental improvements in making the process faster, less laborious, and so on. So this is sort of like a long answer to your question, Michael. But essentially what I'm trying to say is, come talk to us. We know where are the various funding, the people who can help, and the various information. So essentially, we are the first point of contact to help you sort of fast track, if you're an entrepreneur, to fast track that process in getting some extra help.
Excellent. So you just mentioned the Innovation Technology Fund, right? So that would be something where you really guide fintechs through the whole process and really make sure that there's, kind of a very efficient way to tap into that kind of support.
Right. No, I mean, more concretely, in the past, is pretty much someone went onto the website or IDF, so I fill out the form, online, and just just pray, right? Just pray to hear from the government folks and get God knows how long, right? But now we actually have a dedicated team, a team of real people. Actually, I met some of those ladies. They are super helpful people, very, very nice, great empathy and everything. So this team of people are really the ones that I would highly encourage to entrepreneurs to talk to. At least you have a real person to talk to hold your hands along the way. And also like accelerate process.
Yeah, sounds like a lot of red tape has been cut off, right? So that brings me to Helene. Also, I think you have saying in the beginning, you're sitting at the center of all of this, right? So, and you're speaking with so many different startups and fintech companies, right? What's your advice?
Yeah, it feels a bit like at the epicenter or at the center of a storm where actually, sometimes it's eerily quiet, because you were sort of like reaching out to different people and ask, seeing what you can do, what more the association can do to help. Now, I think if there are two pieces of advice based on like what Mark said just now and what King said, I think managing expectations is a very key one to navigate through the storm. It's sort of like knowing your own strength and weakness. There's never been a better time to pivot than now. So if you want to be a bit more resilient, maybe the playbook that you had before, parts of it may not work out, in the current environment. So you need to be flexible. You need to pivot. And at the same time, you need to try to go for lower hanging fruits instead of chasing the more distant things that might take a bit more time. So if your business is at a stage whereby you need immediate cash flow, the burn rate is not something you can live with, then probably government funding as well as tapping into existing investors is a much better bet than going out to meet new VCs. That is going to take a much longer cycle. And you have to be realistic in managing expectations, because time to market is always longer than you think. Fundraising, it always takes longer than you think. And burn rate sometimes is shorter. The runway is very often shorter than you think. So I think bridging that, it's probably a good way to balance the two and to reach out then to what are the lowest hanging fruits in terms of your own business model.
Thank you. So the good news is really, despite a really difficult, challenging situation, there's not just opportunity, but there's also a lot of support and a lot of help there. And really, especially government has really accelerated the way because of the importance of financial services and fintech, especially for Hong Kong, right? To really help out in a way that is really not seen before. Good. So we also would like to make this a rather interactive webinar. So I think it's time that we slowly move to the questions from the audience. And before we get to that, maybe just use the time to also talk a little bit about, other opportunities to work with companies like Accenture or other consulting firms and systems integrators in order to get your idea faster to market and generate revenue. Because I think what's really important is that you can really show also to the investment community, right, that you have a high return on investment, right, and you're revenue generating. And I would really like to make a little bit of advertisement for our FinTech lab in Hong Kong, because as Accenture, we've just started our 7th FinTech lab in Hong Kong. So over the past 6 years, we had about 49 startups that have graduated from the Accenture FinTech Asia Pacific lab. They've raised over 525 million in funding. They implemented more than 200 solutions, and in total created more than 1,500 new jobs, right? And just to give you one example of how we help the fintech get into revenue faster is one of my favorite alumni, which is a company called LeapExpert that have a really strong and really good instant messaging solution. And when I saw that, I was really impressed. But I also realized that actually, if we add an important capability on top of the solution, which is analytics, because instant messaging is a very rich source of data, right? Then we can really add a lot of value for the banks and insurance companies deploying their secure instant messaging solution. So we brought our Accenture data scientists in, and literally in a week, we created a library of more than 20 analytics use cases on top of LeapExperts, all focused on banks and insurance, that drive much higher return of investment of the LeapExpert solution. And in this way, really increase the interest from the banks, right? And LeapExpert's ability to close deals faster. So it's just one example of that might be another avenue for fintech companies to partner with some of the consultings and systems integrators out there and leverage their access to clients, leverage their additional adjacent or add-on capability to really refocus a little bit the solution and really drive their products faster. Okay, so let's go to the question. There's quite a number of questions there, right? So there's a question here for probably both King and Kate, right? So Singapore, is most or all of the government-linked funding only available to companies that are owned, by Singaporeans or PRs? Is that a limiting factor? And is it the same in Hong Kong? So the question is essentially, does it depend if I'm a PR of Singapore and Hong Kong in order to tap into government support? Maybe we start with Kate, ladies first, and then we go.
This is a trick question for me. So, King, would you like to go first, or?
Sure. Okay. So basically, there's just so many schemes out there, and I don't want to misquote, but let's take the TVP, the first one I just cited as an example. So essentially, the criteria for getting that funding only requires the company to be registered in Hong Kong. Whereas the shareholders, do they have to be local Hong Chinese? The answer is no. And also, obviously, the company cannot be just an empty shell company, right? It has to be, they have some operation in Hong Kong. But other than that, specifically to the question posted, it doesn't require the shareholders or the owners to be local Hong Kong Chinese.
Kate, anything to add?
I'm not an expert on all the funding criteria and grant criteria, but to be fair, based on those that I've observed, most of them, those coming out from the Monetary Authority of Singapore or from Enterprise Singapore, amongst others, most of them do require some element of being part of this Singapore ecosystem and network. I think there are alternatives available for people who are not Singaporean. I think in a few instances, you just need to have a co-founder that is Singaporean, right? I mean, I'm not sure if that helps, but certainly there is still some options available. Though those that are specific that I've noticed come out for COVID, mostly have been for Singaporean companies.
Very good. Thank you. I have a very specific question for Mark, so we'll see what you say to that. It says, we're an India-based NASSCOM 10,000 startup. We are building a startup in wealth and compliance tech segment. We're looking for seed funds. What's the best way to approach venture capitalists or investors?
Okay. Well, the first thing you should think about perhaps is whether VC money is the right pool of capital you should go from, depending on the stage of the company that you're at. So, for example, for seed companies, we typically look for a number of things, whether the product is 60 to 70% built in terms of an MVP, they have some customer traction, or at least they're out with some customer base. Maybe they're doing a POC, or maybe they're talking to the folks at Accenture about what their feedback that they're getting from some experts in that particular category. So first, just decide whether this is the right pool of capital to go from. At the seed stage, to be honest, a lot of folks should actually just look for angels or strategics that can help them. But to answer your question very specifically, how do you approach VCs? I would actually say try your best to get a referral to a particular VC. Try to network to them, or for example, go to someone like King. And King knows us. King knows the VC world, and Kate, will know the VC world, and they will make the referral for you. They'll be able to determine which is the right VC at the right stage, and who has an interest perhaps in what you're doing. So think about that network. That's really important, because we do get inundated with so many sort of outside proposals. It's hard for us to sort of see through the weeds. So having good referrals is important.
Yeah, I understand. There's another question here for Helene. It says, in my experience, I've seen a lot of Me Too startups in the market, like, AML, KYC arena. How would the panel propose that we should help them to channel their efforts into other areas? So essentially, refocusing in areas that are considered worth to be supported and where it can get accelerated access to funding.
Right. That's a good question. I'm sure apart from myself, there are other people like Mark on the panel that might be in a good position to provide further insights on that. But let me take a crack at this. I think this points to what I was just mentioning before about, pivot and also managing expectations. It's like, there is a whole plethora of firms all trying to be going after a highly saturated and not so differentiated kind of segment. And of course, it will be very difficult and hugely challenging at times like this. So I think pivot is part of it. And the other thing I want to emphasize is that, like at the association, we do quite a bit of business matching programs. So that might actually help. For instance, I'll give you an example. We do line up startups and members. Sometimes they are members of the Science and Technology Park in Hong Kong or the Cyberport, where they have incubation programs. And then, of course, we got a whole range of big corporates that are looking to either invest or to team up and partner, either on an equity base or on a project basis. Maybe they will just engage your services to provide something if that fits their needs. So we do quite a bit of matchmaking beforehand to make sure that they are quite relevant, that the corporates we line up are actually looking for solutions that these incubatees or these fintechs are working on, and they are also at a fairly mature stage. They're not just at a kind of MVP. They haven't even gone past a little bit of that experimentation stage. So the success rate has been fairly good in some of these programs. I do encourage people to try to tap into those business matching that I'm sure associations like ourselves in Hong Kong and others would be doing as well.
Thank you, Helene. So, King, your presentation really created a lot of interest, right, in government grants. So the question is really, how can we get more information, more detailed information about government grants? What's the best way to do that? You mentioned there's a kind of an overview of all the different options available. So there's a lot of interest in this space. What's the best way to get that?
Sure. Well, first of all, can Hui kindly pull up my slide, the one with my contact information, so the audience can see it? So basically, I think the short answer is that please drop me either an email or just find me on LinkedIn and drop me a notes. And then I'll, number one, I'll connect you with my colleague, because my colleague, more than a dozen colleagues who are constantly getting this kind of requests. So we actually have one summary slide. I will just put it up. I mean, it's a bit small, but basically we have tried to summarize the information in one slide to capture all the fintech related schemes, so that we're happy to send it off to you. And secondly, we also connect you with the nice ladies at SME1 in that office, and then that team can actually handhold the entrepreneurs through the application process, answer questions that might seem a bit difficult to understand based on the website and so on. So,
excellent.
So Hui, have you pulled up already?
Yes, it's already there to see. Just a follow-on question, King, for you. So, and I know this is probably very difficult to answer because it really depends, on the different programs. But how long does it take to apply, the funding schemes? Will fintechs be able to obtain immediate support and relief? And again, I understand there's no generic answer, but maybe it's just maybe one or two examples.
Okay, so let me perhaps cite a recent conversation I had with our colleagues at the Science Park. So Science Park is one of the two major incubators funded by Hong Kong governments. So by the name of it is basically the place where a lot of the particularly deep tech companies, including fintech space, would go into. And actually the Science Park is also, besides being the kind of landlord for the startups, they also get a lot of funding from the ITB, the Innovation and Technology Bureau, in which they are administering a lot of the the fund provisioning. For example, one of the funds that they are managing is called the Corporate Venture Fund. So the typical ticket size of that Corporate Venture Fund, which is, to my understanding, 100% government money. So that fund's, the fastest, I would say, the release of money in terms of the whole approval process or evaluation process is 2 months. Okay, so this is the fastest they have done it. Of course, the one that would require more, due diligence and information back and forth, it can take longer, 3 months, 6 months, and so on. The fastest 2 months.
This is a very good example. Thank you, King. And just maybe a last question, because we're slowly getting to the end of our webinar here, or maybe two more questions. Kate, there's a question here. Could you please elaborate a little bit more on venture debt? So it sounds like, there's quite an interest in that, and maybe not as widely known as we would assume.
Sure. I'm not an advocate for venture debt. I'll just present what venture debt is, because there are VCs who would advise against it. And again, Mark, feel free to jump in if you would like to share your view as well. Venture debt is a debt offering in which a fund lends a set percentage of the last equity raise. And I mean, in layman terms, right? Think of it just like any car loan, home loan that you have to take, right? And so, but the point is that if you were to raise venture debt, there is no equity dilution, right? There is a cost for borrowing, and so do take note that you have to be able to demonstrate that you have a good positive cash flow. Right. And based on some of the venture debt partners that we've spoken to, I mean, they don't consider themselves to be in the loan business. Right. They describe themselves to me as growth. They are growth investors as well. And they are supportive of companies, and they do want to make sure that these companies grow. Right. So, if you are able to, and you are confident of securing VC funding, right, in terms of being able to supplement additional money, right, to hire maybe a really important person that you need in the next 6 months to 1 year, right, you can consider raising venture debt. Mark, what anything you'd like to add in terms of venture debt?
No, Kate, I think you covered it perfectly.
Yay!
Excellent. So let me come to our final question. This really goes across the panel.
Hey,
Feel free
Michael,
whoever would like to. Sorry, King, of course. Yeah,
okay.
please.
I just want to add to Kate's sharing. So first of all, we've been trying to find out the various investors, the banks, and so all the people who hold the purse string around Hong Kong. So one of the major banks in Hong Kong, I won't name names here, but then they have a GBA fund. So we actually did a webinar in collaboration with this bank, literally, I think 2 months ago. So one of the things that was brought up by the audience is about this whole venture debt idea. And this is exactly the positioning of this GBA fund. So I think for those of you who have been following the scene of like virtual banking licenses or digital insurance licenses being given out by Hong Kong government in the past 1 to 2 years, essentially there's a capital requirements. Let's just say it's a requirement of 100 million. That's right, 100 million. Yeah, that's right, 100 million Hong Kong dollars of money capital put aside to get a license, for example. So this is the kind of money you probably won't get, or you shouldn't get from the VC, right? So this is exactly the kind of usage where this bank is happy to give you the money for this particular purpose. So anyway, otherwise we can connect you.
Yeah, and just be aware that not all venture debt programs are the same. It's not just the principal terms or the debt terms. Some actually can be dilutive, but it's an easy dilution. It's one that actually makes sense. If you look for sort of U.S.-based banks that operate in Asia, they do offer. Some of them do offer venture debt, which is more akin to what you see in the U.S. But there are some firms, particularly some in Singapore that I'm aware of, that specialize in venture debt and do a good job. And the idea here is not just to take a debt instrument, it's to look for firms where you can also get advice and access. So while capital is important, at the early stage, you should be looking for how it will strategically benefit your business, your board, your management team, your operations, whatever it may be.
Excellent point. Let me come to the last question, which is a tricky one. It's really, I think, for Mark and Helene. And I guess if you ask 5 people, you probably get 6 different opinions on that question, right? But in the current circumstances, right, the current situation environment, do you see that fintechs, companies should refocus on specific solutions that are more attractive right now than others? Maybe first Helene and then Mark.
Sure. Okay, it's just a tricky question in the sense that there's no one size fits all,
Exactly.
But what I can share is that, like in the many webinar series that the association has been doing, in this COVID period, there are a couple of top of mind, solutions that people are wanting more of, because of COVID. Partly is sort of like, remote work solutions. Okay, something that can help them work remotely, because the new normal after COVID, people believe it probably won't look exactly the same as the normal we left behind. So, people are revisiting, do we still need to travel as much? How much of the workforce need to occupy an office, for instance, and so on. So remote work tools actually it's very top of mind. The other is, of course, a lot of RegTech solutions around, whether wet ink signature is needed with all this lockdown, and God knows when we will all emerge from a total or partial lockdown. So there's a lot of like instant messaging, but our compliance and RegTech related, the regulators here, as well as I'm sure around Asia-Pac, have put out frameworks and guidelines to financial institutions around that. So I think those are definitely areas that we see are top of mind. Maybe Mark can add to that.
Well, I was just about to say, Mark, this is probably difficult to add something on top of that, but I give you a chance.
I think Helen covered it pretty well. I don't have much to add on top of that. Again, I think everybody sees the trend. You want to be more digitally enabled and so forth. But I still think it's important for founders to think about what problem they're solving, and whether that problem is one that is sort of horizontal. Is it wide? Can your technology solution fit across multiple parts of the fintech ecosystem, or maybe go from financial services into retail, whatever it may be. And I'll give you an example of a company in that sort of space. Or is your problem super deep and you need to really focus on solving this problem for a set of clients in a specific market, specific region, whatever it may be. And so the basics of entrepreneurship, I think, still apply here, regardless of the economic condition or health condition. And so recently, I saw an amazing Hong Kong company that was doing something in property for sort of financial services property solution, and it made total sense. And I think the entrepreneur wanted to really break out of Hong Kong, but they hadn't solved the problem yet for Hong Kong. Right? A lot of us want to jump out of Hong Kong and go global, or look to be a multi-market type of startup, when in fact you can just work in this market. It's big enough to really prove out the product market fit, really go deep in what you're trying to do, and come back with some meaningful, tangible ROI, some results, some could be number of users, could be revenue. So that to me still plays still very interesting. And then on the other hand, you had a US-based company which was solving something for churn. How can enterprise businesses lower their churn, identify churn, solve that? And so what they realized was financial services was interesting, and they were making a good amount of money from it, but they could really go into retail, e-commerce, and solve churn across a wider spectrum. So they were going horizontal. And that also made sense. So the moral of this whole long story is that solving problems still matter, and solving problems with unique tech, with good distribution, still matter.
Which leads me to a final point that I would like to make, because as I mentioned before, we've just started our 7th FinTech lab in Asia Pacific as Accenture, right? So we have just opened the applications. So that would be an opportunity to apply and get help, get through the program. And this is exactly where we are focusing on, right? How can we help you to really, get the right product, the right services, right solution out to the market, and help you to really approach the right clients with it. Okay, so let me just in summary. So I think what looks like a very challenging and difficult situation, not just the general economy, but also for startup and fintech companies in particular. Actually, there's a lot of bright spots, right? I think there's a lot of funding available. There's a lot of people who have really, cut red tape and made it easier and faster to really get to support and help those young startup companies to grow. So, and I think a lot of information out there and very good advice that we also got from the panel. So with that, let me close our webinar. And I would like to thank the panel members who are in high demand, that hence your time and your valuable insights are very appreciated. Thank you. I'm sure our audience has got a few good ideas of how to navigate this challenging time for a startup. At least I got a lot of additional insights from you. And I would like to thank our audience for joining. And, I believe I speak for the entire panel in wishing you all the best. Every successful fintech is good for Hong Kong and is good for the wider Asia-Pacific fintech ecosystem, right? We're in tough competition with North America, with Europe. And with that, I would like to close the webinar. Thank you all, and I wish you all the best and hope that you get all the funding that you need. And we hope that we see a lot of exciting new fintech solutions out there in the market. Thank you and goodbye.